Good morning, good evening, good afternoon, traders. Steve here at Logic FX Trading, and welcome to our daily FX analysis. Let's just quickly start with the economic calendar, guys. Yesterday we had inflation in China and yuan loans both come in negative. Does seem to be a bit of a cooling off of the Chinese economy, particularly with the whole Evergrande episode, which I see they defaulted in their payment recently. Don't know if there's going to be a bigger problem with that or not, but we will keep an eye on it. Not because we particularly want to invest in the yuan or trade the yuan, but it's just to see if it becomes contagious into the bigger bond market or the world bond market, guys. Don't think there's too much to worry about. And then today we have inflation rate in Germany come in as forecast, 5.2. UK GDP come in at 0.9, forecast 1. And GDP year on year come in 4.6, forecast 4.9. UK's having problems at the minute, guys, which is the reason why we're talking about during the week. We're saying about how the pound may well continue to go short rather than have the boost that we thought it may have had the Bank of England become a little bit hawkish and started talking about raising interest rates. That seems to have been put on the back burner until we get through the next few months and we see what effect the new COVID variant is going to have on the economy. I still have it in the back of my mind that it's not going to be as big a deal as feared for many reasons. Firstly, I don't think the illness is showing severe, as many people severely ill. Sorry, that's the word I'm looking for. But over and above that, we're kind of used to it now and we're kind of living with it. Whereas, in 2020, it was completely new. There was no vaccination and it was shut down the world economy. We're not going there, guys. Having said all of that, as we've been talking about this week, it could well be the the straw that breaks the camel's back so far as the stock market's concerned. But we'll have to see. We had 2 good days earlier in the week, and then yesterday was negative again, guys. And stocks all back down again yesterday, and cryptocurrencies all down. So all in all, not a great 2 or 3 months, folks. But next year is just around the corner, and we'll pick it up again from there. So in the meantime, let's get back to our currencies. Core inflation rate and inflation rate in the United States to come out later. If they come in hot, you could well see the dollar going long on the expectation that the Fed will act sooner rather than later and hike interest rates, guys. We'll have to see how that pans out. But I'm still long on the dollar. But obviously, we're talking about long as in on a daily time scale, not necessarily on a weekly time scale, be more like it, but not necessarily on a day-to-day time scale, guys. And we'll look at that in a moment. And then obviously tomorrow is Saturday, so no major events. Just over to the charts quickly, let's have a look at what we've got here. Pound Swiss, Euro New Zealand, Euro Aussie CAD, and Aussie New Zealand, all alarms. There were a few other ones went off yesterday, guys, but I cancelled them. I usually like to let this just run so that we have an idea in the morning what's happened over the previous 24 hours. So definitely a bit of movement on the Aussie and a bit of movement on the Euro. So quick look at the yen. Still bouncing along there, guys. No definite direction with the yen at the moment. DXY, I got into dollar CAD yesterday, as I said I would. And I've now got my stop loss at 0. It's about 3% up. Which is all right. I'll not be taking that, guys. I'm going to wait and see if the CAD continues to devalue because of the putting back the interest rate decision. I'm still wondering whether we're going to get this. So that's why I've got this in. It's still possible from this position. But if this continues to push up, it may become less probable. Having said that, guys, you know how these things work. You get that, and then it runs and runs and runs, and the next thing you get that later on. So let's not write this off yet. But in the short term, probably long the dollar. But let's see how the inflation figures come out today, guys. Because if they're bad, in other words, they're higher than expected, then you could well see the dollar going long with that, folks. Euro US, and obviously this will move in the opposite direction. Is this move complete? That's the thing we don't know. We were looking for something like that before looking to trade it short, but it could be that that's it, and off we go, guys. And obviously, listen, nobody knows. What you've got to do is get yourself a system and get a direction, and then trade it in the direction that you've decided that it's going, and trade it in such a way that if you're wrong, you don't lose very much money, and if you're right, get your stop loss to zero, and then hope that the currency continues to move in the direction that you've traded, and then at some point decide that you've hit your target. Pound USD. Well, excuse me, folks. I think this will continue to drop. I'm going to take that out now because that's defunct. I think it'll continue to drop. The figure that was banded around yesterday on Bloomberg was 130. It's not far off where it is at the minute, guys. Yeah, 130's in there, isn't it? So I wouldn't be getting overly excited about that particular trade. Aussie USD, it's still in this corrective structure, guys. I would just let it do its thing, and eventually it will start to drop as the dollar gets stronger again, guys. And at that point, I'll probably say, hey, listen, there's a possible trade down there. And the New Zealand probably be the same. There's a little break of that. That's the dollar. Remember, the Aussie's a little bit stronger than the New Zealand at the minute. So we've had that breakdown there. Is it going to continue down? Possibly. But we could see one more up before it goes. So if you were going to trade it short from there, guys, just make sure you've got your stop loss, up above there, or even further if that's the way you want to trade it. US CAD. Now, yeah. Oh, I'm just trying to figure this out here. Yeah, she's moved up. Probably continue to move up. Now I've got this in here. I'm not entirely sure that that's going to happen. I think what we were doing there was saying that, obviously you could end up with something like that before the dollar starts coming long. But I'm not overly convinced with that. I haven't stopped. Wherever I got in yesterday, it was there or somewhere. And now I haven't stopped loss at zero. If this drops, I'm out of the trade, but it doesn't matter. It didn't cost me anything. And I'm not going to take 3%. I'm going to try and let this run and see where we get to. If the dollar goes long today, we'll have a nice boost. And if inflation figures come out below expectations or below forecasts, you could well see the dollar pulling back. Doesn't matter, guys. The important thing is not to lose your capital, particularly where currency is concerned. Stocks, if you hold them long enough, unless the company goes bankrupt, you'll you'll usually get your money back. Whereas currencies, you can get yourself into a lot of trouble um, because of leverage, guys. It's not the currencies getting you in trouble, it's the leverage. US Swiss, well, you can see what I've done here, guys. If it came to there, I'd be interested in trading it up. Those arrows shouldn't be there. I'm not suggesting you trade it down there, guys. All I'm saying is if we got the other side of that and it come into there, that might well be a decent place to trade it long, but it could go long from here. Yes, Swedish, nice setup there. Were we looking at this? Yeah, we were looking at that and saying maybe get a fifth wave down there, and then from there it goes long. So that yet again would be the place that would be keen on trading that. Of course, it doesn't have to break, but usually they do. And if it come down into there, I'd be interested in trying to trade that long. US yen, same thing. We're looking at the zigzag. Doesn't have to come off, but if it did come off, that would be a place to start looking at trading up. Of course, it could go long from here. Gold, well, if the dollar goes long, gold will drop, and vice versa. Silver, I was looking at this. Was it yesterday we were looking at this and we said that could extend on down into here. Well, it's obviously a while before that. And if silver came down into there, it might well be worth trading it, guys. I'm already in it, as you know, but I've been stuck in it for a very long time. I've been stuck in it from here somewhere. I think July, it was somewhere around there. I bought into it. I know where I bought in the gold. It was here. When was that? Yeah, May, June, July, sometime. So it would have been the same with silver. May, June, July, yeah, would have been here. But I traded that up in my defense. I traded that up, took profit, and then I thought it was going to continue on up because I was looking for a drawdown on the stock markets. So I got back in again. And what I'm finding is that, or over the years, should I say, what I find is with trading is that if you get a win, guys, just walk away from it for a while. Let the thing rest, because if you get greedy, you end up with something like this happening. Corsair's a very good example of that, because Corsair had gone away up, dropped down, and I got involved in it. And then there was a short squeeze and it went up and I sold. Of course, at the time I didn't know it was a short squeeze, but it turned out it was a short squeeze. It went way up and I sold out and made a nice profit on the trades that had taken. There was two of them. But as it dropped that day or the next day, I bought back in again, being greedy, because I thought, well, that's the new direction. There's the trend. We've had a correction. Didn't check to see what the news was or why the thing had happened. It was a short squeeze, guys. And off you go. I'm thinking, well, it's pulled back. People have taken their profit, just as I had done, and we'll start going long again because of the reasons that it went up in the first place. Well, no. It dropped. I bought in. It dropped some more. I thought even better. We'll average down. Dropped some more. Bought some more. And now we're way down here somewhere, guys. So be very careful when you get a nice move like that. Don't get greedy. Take your profit and then step back from the thing for a few weeks, guys, and then make sure that your analysis are correct, or you at least understand what happened. Because if you understand what happened, then you'll know whether it's a good idea to buy back into it or not, or you'll have a better idea of whether to buy back into it or not. So how come I'm telling you that, despite the fact that because sometimes I'm lazy, guys. Sometimes I'm lazy when it comes to trading, because I want to just get by the thing because it looks great and let's not worry too much about doing the analysis. And when you do that, you lose money, and I need to stop doing it, guys. But we only learn when we get something wrong. There we go. So this, I suspect, could well drop down to here. It's maybe in a little double bottom here, which could be enough for that wave to finish. You know, it could be truncated, but I suspect it will push on down and probably be of that sort of degree of magnitude there. Oh, we've already drawn it there, guys. So that's where I've got that figure from, because I'm looking at this as a 5-wave move down. It's a diagonal, guys. It's not an impulse. It's a diagonal. But it's come down after we've had an A, B, and this is a C. And if we get down to there, chances are it'll move back up. Whether it's going to break the top or not, I'm not going to guess that. But it'll potentially move back up into this band here, guys. Particularly if inflation continues to push along and the stock markets continue to be problematic, guys. Bitcoin, we're still waiting to see if it's going to come down into this sort of region. It's down to 48,000 from a peak of 69,000, is that? From 68,000. So it's down $20,000 in a matter of weeks, guys. From, what was that, mid-November to November the 21st to December the 10th. So it's 20 days. It's 3 weeks, guys. It's dropped 30%, or 33% or whatever. So that's quite a move there, folks. So let's see what happens. If it comes deeper, it may well be worth trading, or at least getting into some other altcoins, because they all tend to move in the same direction at various rates, but the same direction, guys. And Ethereum, same thing. If it were to drop further down into this region, as we discussed yesterday, of course, this may not be a thing. Maybe that's the channel, and it's getting close to the point where it pushes long. All I'm saying is that, given how explosive it's come up, if you believe it's going to continue to get to 100,000, on Bitcoin's point of view, if you believe it's going to get to 100,000, the idea that it's going to do that in the current market isn't feasible for me. And therefore it'll get there slowly but surely. And if it does, then it'll run like that, guys. I could be completely wrong. But if you wait for it to drop and you buy at the lower levels, then you're reducing your risk. Oil, that's, still on that little recovery there, guys. Euro CAD, little bounce yesterday. Just looking to see if the CAD's going to continue to weaken. Maybe that pushes up. I'm not convinced by that. Euro was I think the next move in that short, folks. Do I think it enough to trade it? No. There's too many things to trade, guys, to jump into things that aren't blatantly obvious. Euro New Zealand certainly looks like an ending diagonal. Look at the momentum as it's dropped away there, guys. Would not be surprised if we got a move down there. Euro Yen looks like it needs to correct, guys. Maybe there's a trade there. I'm not interested in it. Euro Swiss, if this breaks out and we start to get a trend moving in that direction, then maybe trade it long. Pound CAD, well, we're getting a little bounce on at the minute, but what I would do is I'd wait for the bounce to finish and potentially trade it down. There's better things to trade. There's a little bounce there. I think there's more downside to that. There'll be more downside to that. and possibly more downside to that as well, but I don't see a setup for getting into that. Pound euro, I don't trade it. Pound yen, flat to down. Let's take that out. We thought it was going to go long from there, guys. We've got a zigzag in there. It is tapering off. It could push up if you look at that structure, but I don't see nothing positive about the pound at the minute, guys. Aussie yen, yeah, probably a better bet there. Could be setting up in there. Remember, in 4 hours here, guys, you look at it a bit closer, you could possibly see a setup there. This is pushed on up. A bit annoyed for all the reasons that I get annoyed in that I forecast it and I got out of it. And it pushed up yesterday, a little alarm off. And I thought about buying it, and then I thought, no, just leave it. But it stayed there so far. So that could be a breakout of that little correction. I'd have preferred to have seen more. It could still do something like that, guys. And if it did that, I'd certainly be a lot happier about trying to get into it. Aussie Swiss, same thing, guys. I think it'll go long, but I would like to see a bit more downside to it. Let's get into the 1 hour for these things, guys. You see that? That looks like it wants to drop, but then if it did, I would look to trade it that way. Aussie CAD. Usually I have nothing much to say about this, but potentially there's more upside to it. If that's a completed zigzag. What's it been doing on the higher time frame, guys? Yeah. This is a big smile, isn't it? A big inverted teacup. What happens after a teacup? I don't know. Can't remember. People see all sorts of patterns. What people forget is, you can look at the cloud and you'll see whatever you want to see. So it's the same with these guys. The brain works in patterns, making sense of things. So that's how people see ghosts and Jesus in bread and on bits of cloth, and the brain just sees what it wants to see, guys. So that's why we have to be wary of a lot of these things that people claim to be structures. The most important structure is, let me draw that again. That's the most important structure in trading, guys. If that's your trend and you've had an impulse and you're not in it, wait for your correction on all time scales, guys, and then trade the next impulse up. And then obviously, if you have a stop loss there or there, depending on what leverage you're using and what time scale it is, if you're wrong, then you'll minimize your loss, guys. And you'll see that structure everywhere. And the impulses, often will go like that and give you a 5, but not always. Sometimes they'll give you a 27. Well, I'm being pedantic, but you understand what I mean. Sometimes they'll go and go and go. So you're always looking for, once you've determined fundamentally which direction you believe something's going to move, then you're always looking for a zigzag for your setup to get in long in the next impulse, guys. So in this situation, you can see that's 5, 1, 2, 3, 4, 5. They're not always that obvious. That's an impulse, but it's not obvious there's 5 waves in it. But that one, it's obvious there's 5 waves in it. The third wave is obviously the longest. The fifth wave is of a similar order of magnitude to the first wave. It's a little bit shorter. Excuse me. And now we've had a pullback, which actually moved well beyond the fourth wave. Why has it done that? Well, because the third wave was so extended. So the corrections come into there. The structure of the correction at the moment doesn't necessarily look nice because you really would prefer to have something like that. But it could turn out that it comes back up to there and then does something like that, and then off it goes again. But the point of it is that when you've been doing these day in, day out for years, you just see structures sometimes that either make you very positive about a particular trade, or the other way around. You want to trade in a certain direction, but you see a certain structure and you say, do you know what? That structure's putting me off trading that. So I'll wait and see if the drop comes. And if it does, then I'll trade it that way. Now, having said that, you need to be disciplined, probably more disciplined than what I am, but that's easy. But, I'm not an attention to detail person, guys. If you are, you'll hammer it with this stuff. CAD Swiss. Right. Ordinarily, I'd be looking to trade that up from there, guys. But given what we know about the CAD at the moment, I'll not be trying to trade that up. That was a nice trade that we identified. Remember, on the 1 hour time scale, this is a nice move here. There's a beautiful impulse, guys. Now, it was nice because we identified it as an ending diagonal on the 1 hour time scale, and it pulled off. We see them all the time, guys. So that's a structure which, with a high degree of probability, you can trade it. And there you have it. But it's already happened. Now we've got to decide, well, what's going to happen next? Now, ordinarily, I'd say, well, we're getting a pullback. Put the alarm there. We're looking for that. The problem is because of what we talked about this week with the CAD. So for that reason, I'll not be trying to trade that. And CAD yen's the same thing. We got the ending diagonal. It's not a beautiful ending diagonal, guys, but it is an ending diagonal. It's obviously it's inverse, but it's an impulse. And then, let's do it like that. It's an impulse. You get a pullback, a new high, a pullback, a new high, a higher low, a higher high, a higher low, a higher high, and then you get your pullback. Now we've inversed it here, and there you go. A higher low, a lower high. If I got that right. No, sorry, it's not a lower high. That's the high, sorry. It's inverse. It's easier if it's upside down, folks. Or if it's got myself into trouble. There we go. You can see how that matches more or less what we're talking about there. Impulse, high, low, higher high, higher low, higher high, higher low, and then eventually it corrects, and there's the correction. Okay, where are we? We're nearly done. These aren't supposed to be long, guys. New Zealand yen, same thing, guys. You got the ending diagonal. It did give us that, which kind of put us off, which doesn't look like much now, but when you get this on a 1 hour time scale and you're looking for it to break to go long, and then you get that push, it's a little bit disconcerting. But nonetheless, anyone who'd been brave enough to get into that, it hasn't gone far, but it is going the right direction. Get your stop loss to 0 and hope that it continues to push on up. New Zealand CAD, yet again, because of the CAD, we don't know. New Zealand Swiss, I think that's setting up to go long, but I'm not over enamored with it, guys. There is a possibility there. If that's a 1, it's a diagonal, obviously a 2, a 3 with an ending diagonal, pushes back up. Would you be surprised? Now, the thing here is it could be just a zigzag and then off we go again, but it's possible that it'd be a 5th wave. So a 1, 2, 3, 4, 5. It isn't beautiful. But that would be the place that I'd be a lot keener to try and trade that long. Is that going to happen? I don't know, guys. Would I try and trade it to there? No, I wouldn't, because it could easily just push on up from there, and then you'll be in a world of pain, because we all hate losing money, guys. Okay, that'll do for the day. It'll do for the week. I'll speak to you again on Monday. Cheers for now. Bye, guys. Have a great weekend.